shortly expecting the US Red Book year over year. US Red Book year over year, 5.3%, 5.3%. So shortly expecting the ECB bond settlements for the week.
All right, everyone. Welcome. Hope you're having a good trading week so far. Welcome to Back to the Futures with me, Markets and Mayhem. We're going to be talking about a number of different markets today. We're going to be focusing on the S&P 500, NASDAQ. We'll talk a bit about the small caps, the Russell. We'll also look at rates. We'll look at the 10-year note, crude oil, gold, silver, and a number of key stocks that a lot of folks are watching here, such as Meta, NVIDIA, and several others as well. So stay tuned. This will be a pretty fun little broadcast here that we do. And just give me 1 second here. I'm just taking a look at something that's
The effective Fed fund rate is unchanged at 5.33% for April the 22nd.
all right. Excellent. So let's fire things off here. First, this is everyone's favorite part of my presentation, and that is the general disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss that is not suitable for all investors. Past performance is not necessarily indicative of future results. So let me bring my screen up here. Everyone on Bookmap and elsewhere, y'all should be able to see this. Here's a little bit about me. My real trading journey began in 2005, funding my own account and trading stocks, then moving on to options, futures, and Forex. It was interesting because I did my first trades when I was a much
Seeing the
younger
ECB
person
bond settlements
during
here,
the
holdings under PEPP at 1.66 trillion euros as of last week. The ECB settled 2.31 trillion euros in public sector bond purchases and 312.8 billion euros in corporate bond purchases.
Sorry, I'll just disable that for the time being and get back into it in a moment. But I did my first trading when I was a younger person. I actually bought Yahoo and Amazon during the dot-com boom with some money I had earned working, but I was too young to trade on my own. So I had my dad place the trades for me. The stocks basically doubled the next day, and that got me scared, actually, because I felt like if the market was that easy, then no one would ever work. Right. So that actually had me take a step away. And then I didn't come back until 2005 when I felt like I had my bearings. And that's when I started trading my own money. And of course, only several years later, the great financial crisis came, which was a great humbling experience because the market seemed so much easier before that happened. And there were some great trades during GFC and there were some terrible trades. But what I did do is I learned that lesson from the school of the markets, right? We all pay a tuition to the market. It's our choice as to whether we decide to learn the lessons being taught. And I certainly spent a lot of time focusing on learning those lessons as they were being taught. For me, it was a really important formative experience to be able to navigate through such a time where all those old concepts of buy and hold and stocks only go up and all that were challenged really for a couple of years. From late 2007 into 2009, we saw a lot of turbulence in the great financial crisis that caused me to have a better appreciation for key concepts, being more systematic, less emotional, being more driven by momentum rather than just gut feeling, looking at the price action to lead a lot of my ideas, because I can have an idea, but if it's not validated in what the market's showing me, I can't play that idea. It's a big difference. And then also, over the last several years, adding more importance into options flows, positioning, sentiment, volume profile, incorporating that into how I view the market. And that'll be all part of how we talk about things today. And I began working with Bookmap in early 2022 because I saw great value in the way their platform, including the heat map, icebergs, and stops, added to my ability to visualize what's happening in the market. We can see turning points. We can see where institutions are passively accumulating or smaller traders are getting blown out of their positions or both. And then I built my advanced SPX options visualizer to better show how options impact price. If you zoom out, and you look at how the options market trades, every day there's about 1.2 trillion of notional exchanging hands in SPX options alone. Across the broader equity futures markets, there's about 400 billion of notional trading hands every day. So it's fair to say the options market really is the tail that wags the dog. The more we understand about the options market, the better we can do as traders to look at where there are other drivers of price, right? It doesn't mean you have to focus solely on it, but it should be part of your toolkit, part of your awareness. So let's talk a little bit about what I'm seeing in the market, and then we'll dive right into Bookmap. The first thing on screen, this is from JP Morgan's Prime Desk. It shows that US equity positions are still very long. So asset managers, even though we've seen this downward pressure in the market, they actually remain quite long US equity exposure, which is just a little bit of a concern because a number of different measures show that they're getting increasingly offsides in some of this positioning, and that could lead us to some more motivated distribution if we continue to see downside pressure, particularly below that key SPX 5000 level. The next chart I have is of the blackout window. This blackout window is something that happens every earnings season. Right now, 97% of S&P 500 corporates have entered that blackout window. And so that means that some of the largest supportive flows for this market are on pause for some time to come, particularly this week and next week, where between the 2 weeks, you've got, over 40% of the S&P 500 reporting in terms of market capitalization. And this week alone, it's just a significant amount of S&P companies. We'll look at the earnings picture just a little bit later in terms of what companies are reporting and how that is a pretty big driver of potential event volatility catalysts. But it's not only buybacks that are on pause, those important supportive flows from companies buying back their own shares. It's also the flows from SPX put options decay. So skew is already quite low. This is not really a well-hedged market environment. And that being as low as it is just means that downside risk is something that would cause more folks to have to sell into because they haven't necessarily insured their longs. They're more likely to distribute in an environment if they are caught off sides. But the other side of it is that we're past options expiration, which means those passive Vanna and Charm flows or those SPX put decay flows are also on pause. So these are two important drivers of buying in the market that are temporarily on pause while asset managers are very, very long. So they don't have much buying power. If you look at Bank of America's survey of fund managers, they're the most bullish in terms of positioning and sentiment that they've been since January of 2022, and they have cash allocations of about 4%. That means there's not a lot of cash on the sidelines for them to accumulate. And I think that's important. The other thing is that the picture has changed. Going into this year, there were a lot of very positive ideas about this disinflationary flow that would keep the Fed on track to cut. I mean, going into December earlier, there were up to 7 cuts priced in by the Fed in terms of Fed funds futures, right? Now we're talking about maybe 1, and there's an increasing probability of none or maybe even a hike if inflation continues to reaccelerate. We do get PCE this Friday. I think it'll be a very important number for the market one way or the other. If it's cooler than expected, I think rates down, equities up. If it's hotter than expected, rates up, equities down. Either way, though, between that and GDP, lots of economic data this week to keep an eye on. We also see that the outlook for rate cuts has shifted dramatically. As I was talking about, that options implied probability, now we're seeing 3 or more rate cuts in 2024 at about 20%, and the odds of 0 cuts or even hikes exceeding that over 30%. That's another area where it's causing that repricing. Why does this matter to us as traders? Because it increases volatility in rates markets, and that bleeds through to equity markets. It tends to diminish liquidity. It tends to increase the realized volatility we see day to day as a result, and also the possibility of implied volatility rising. So we'll talk about that in a moment. But first, let's talk about what else is happening in rates. We're seeing an appreciation of lower quality being lower quality. Junk is being sold down. We're seeing high yield spreads widen a bit. They were at the tightest we'd seen since the first half of 2021, where it was sort of an environment to buy everything that isn't nailed down or on fire. Now we're seeing some greater appreciation for the risk in this lower quality debt. And that feeds into this theme of tightening financial conditions. Rising rates, lower liquidity, equity prices coming down overall. We are seeing financial conditions tighten. That is something that is an important realization because we had been in an environment where financial conditions were looser than when the Fed first started tightening for some time. Now we're starting to see a bit of an upheaval here, and I think it's important, particularly if this trend continues of rising rates and reaccelerating inflation, inducing more pressure in equities and greater volatility across a number of different asset classes. So let's talk a little bit about some of that volatility. This is a chart of the MOVE index, and we had one of the largest moves in the MOVE index that we've seen in years, going back to 2022. This matters because what it tells you is rates volatility is on the rise, and that tends to permeate into other asset class volatility like currencies, commodities, and of course, equities. And we can see in equities, realized volatility is also on the rise at the highest levels that we've seen since earlier this year. That's giving the VIX cause to move higher, but it's also due to another factor, and that is reduced overall order book depth, which we'll get to. But first, NASDAQ breadth is also weakening. What that's showing you is there is a rolling over deeper inside the NASDAQ. A lot of these leadership stocks are starting to buckle under pressure. These tend to be more rate sensitive stocks. So when rates are going up, when interest rate inflation expectations are both kind of on the rise, what that tells you is that a lot of these more rate sensitive stocks are going to be under greater pressure. So I think that's part of what we're seeing with the NASDAQ. It's an important contextualization because it tells us that as long as inflation is at the forefront and it's a concern by this market, stronger than expected economic and surprising inflation data to the upside can continue to exert upward pressure on rates, particularly on the longer end, and that can hurt equity performance. And we can also see, when we're talking a bit about liquidity, in the S&P 500 futures contract, liquidity is low. This is a sign that tells us volatility can be elevated, particularly intraday realized vol. It means you can see more slippage. It means that, your execution may not be quite as good. You can have choppier trading conditions. So for me, that's a very simple tactical heads up to shrink position size, widen stops, and be more selective with the trades that I'm willing to take on. Why? Because with less order book participation, you have a greater chance of higher volatility. And with higher volatility, you need to shrink your position size so it doesn't cut you as deeply if you take a loss. So let's take a look at this chart from JP Morgan. This is a great one. It shows you that the lower the depth is, the lower the amount of liquidity in the S&P 500 order book, the greater the potential of a higher VIX. It also increases the potential of realized volatility increasing, as we saw in a prior chart. So again, this is tactical information for us. Whatever time frame we're trading, even if we're investing, we need to be aware of these shifting dynamics. This is an environment that is less forgiving when you're being more sloppy about your execution and your risk management as well. Another interesting point here is the dollar bull trade is starting to get just a little bit crowded when we're looking at all currency positions: euros, yen, pound sterling, Swiss franc, Canadian loonie, Aussie, Kiwi, Mexican peso. This negative dollar bet is just getting a bit extended. It doesn't mean the dollar is going to stop rising. It means it becomes ever more important what happens with rates. So as long as treasury yields are coming up, it's likely to pull the dollar higher, but that's going to be the primary catalyst at this point. You do have the euro. Their central bank, the ECB, is saying we're more likely to start cutting in June, and maybe we'll cut 3, maybe 4 times this year. Obviously, that interest rate differential puts negative pressure on the euro versus the dollar, and the euro is about 70% of the dollar index. So it's all about rates at this point. And I think that that's something that we need to just kind of keep in the back of our minds. For a while this year, we could ignore rates. For a while last year, we could ignore rates, but there were times where they began to matter again, like October, November of last year when we saw that correction. We're back in one of those moments where the negative correlation between rates and equities is on the rise. They matter again. So let's talk about equities. Here's a chart of the S&P 500 futures with some levels on screen that I'm watching closely, as these could be pretty decisive areas of support and resistance, and you can see already how they have acted as such. So if you want to take a moment, feel free to screenshot this, take note of those levels for later, particularly as we're getting into the trading day. We're just about 15 minutes outside the opening bell. As you do that, I'll take a sip of my tea and then we'll move on to the NASDAQ. My overall take on the S&P 500 here is we are in a neutral trend. That is to say, we're no longer in an uptrend. You can see we're right in the volume-weighted Ichimoku cloud. That tells you we're neither in a decisive uptrend or downtrend, okay? So based on that idea, this could be a more choppy environment because we're in a position where people both on the long and short side of the market are closer to being at the money. That is to say, if it moves too much outside of the cloud to the downside, there's a lot more folks that are on the wrong side of their positions and more likely to be motivated sellers. If we move farther up above the cloud and get more into a defined uptrend, you've got a lot of people that are more likely to want to get out of their short positions. Now, the NASDAQ is a less ideal looking chart. You can see we are quite a bit below the cloud after last week's more violent decline in the NASDAQ than what we saw in the S&P. I think that matters. We do see that we're kind of around this area of potential support, however. So I think that's important if we just take that into consideration in terms of where we are right now. We can see this level that we've bounced off of, right? And then this key area going back to earlier 2024. This is an area where that level was pretty important. So I'm looking at that and saying, this is your proving ground, buyers. You have the opportunity to try to take this thing higher. Right now, they're capping out at a key resistance level. And these are levels, the market has muscle memory. These are levels that we continually revisit. That's why I've marked them with these horizontal lines on the chart. These are all based on prior price action and where we could see support and resistance. So again, feel free to take a screenshot of this chart. You can use it later for your own trading purposes and as we're navigating the trading day together here. But I think this is important as a view to sort of contextualize that we revisit these levels a lot. That's why they're important. The market tends to give us ideas as to whether we're back in a state of more positive price action for today. That pivot would be 17,437.25 on the NASDAQ. If we push above there, I think we've got healthy room for continuation. And on the S&P, it's actually above a pivot where I'd be more interested in longs than shorts. And we could see a decent level of resistance around 5102.25. Now, that doesn't mean we're out of the path of harm's way in terms of the intermediate term. I still think this is a market that could see further downside. This week is going to be very decisive. Big earnings week. Big treasury auction week in the belly of the beast. You've got 2s, 5s, and 7s. We'll get to that. And a lot of economic data. So either way, I think it'll be an important week. Let's take a look at crude. This is one that's retracing. It's retracing a little bit more this morning as well. I'm interested in potentially bidding this thing around 80.56. I think my risk reward is somewhat well defined there. And I'm also interested in adding to that bid at the bottom of the trend line, which has been pretty well defended by buyers here. We're still in an uptrend. We're consolidating these gains, and it's not an unhealthy move after the blast off we've had. There's been some perceived simmering of geopolitical tensions that's led to this. There's also been some softness from China, and that economic data is causing a little bit of concern in the overall global picture of oil prices. So even bringing down West Texas Intermediate crude a bit. But overall, I remain constructive on oil, but even more constructive on energy companies. And we've been covering these at Macrovisor and at TraderAid, a lot of individual names that have performed really, really well since late last year. I think that theme is set to continue. It could be a bumpy journey, but I like buying dips in energy. We've also got gold. Gold is actually at a point where I like bidding it. You see this trend line? Yeah, I know it's a bit steep, but this is a market that when it gets excited, it tends to keep moving. And when my risk to reward is this well defined, I like getting involved with a rebid. So I like buying gold here, and I'd be targeting a retest of recent highs around 24.40 for this as a swing trade. Moving on to silver. Gold's extra volatile, crazy cousin, sometimes called the metallic widowmaker. This one is also at a zone where I'm interested in a potential rebid. I'd need to see it hold that 27.04 level on any strength, and then I'd be defining my risk with any close below that level as getting out, otherwise targeting a retest of recent highs just below 30 with this one as well. These are violent commodities, particularly silver versus gold. They tend to be very volatile, but even gold tends to have about 3 times the amount of volatility per year than gains. So these are definitely high beta trading instruments. It's not for the faint of heart. I don't recommend trading them if you're not used to them, but if you do understand what you're doing in the precious metal space, these are 2 areas where I'd be interested in potentially bidding here. Now let's take a look at NVIDIA. NVIDIA is in the cloud, so it is in a state where it is also no longer in an uptrend. We can see it broke both the steeper and the more, I would say, conservative trend line here to the downside pretty decisively. 800 is a very big line in the sand for NVIDIA. This is an area where there's the most amount of both put and call positioning on the entire options chain. We can see how it was a level of resistance yesterday, and also before we climbed above it, going back to March, we can see how it was also a level of resistance that was noteworthy. So for us, the way that I'm looking at this is if we continue down this path, I think we have support at 740.70, resistance at around 800. And if we break that 740.70 support on a swing time frame, we could trace lower to 624.33 or even 493.49. I know that seems a lot lower, but remember how fast this thing rose. If we do see a more determined sell-off, and again, we do need to break down further, we need to get below that cloud, below some key levels of support, but this doesn't have a lot of well-defined support because of how fast it rose. So that always gives you a little bit of trepidation to the downside managing risk. Another one that I have my eye on that had a similar massive path higher is Meta. And I'm really looking at that gap. So Meta, like Nvidia, is in the cloud. So it's no longer in an uptrend. You can see it broke that steep uptrend line as well pretty decisively. So I'm looking at 454.08. I think if we crack that, we could fill the gap to the downside. We could get to 403.14 in pretty short order. I think this is one where earnings is a bigger risk, because if it doesn't really blow away the market's expectations, both in terms of what they report and what they guide, then this has some serious room to the downside right now. And Microsoft, this is another one that rose pretty quickly earlier this year and is starting to look heavier. It's trying to stay in the cloud. I think if it moves below the cloud, we've got 395 as support, 402.14 and 406.15 as resistance. And on a larger downside move, the risk is really getting pulled back into this area where the market really like to transact in this stock. And the top of that range would be about 370, 379. So again, I know these are somewhat bearish, but the reason is we've got to manage our risk first. A lot of these things are rolling over. We should be aware of those downside risks as we get into the most important part of earnings season. Obviously, Nvidia's earnings are further out, but the rest of those so-called Mag 7 stocks, or Fantastic Four, Terrific 2, whatever we're calling them these days, they're coming right up over the next 2 weeks. And I think that's going to be very important to watch. And as I was talking about earlier, we have a busy week ahead. The most important events this week on the economic calendar are durable goods, GDP, and PCE, right? So these are all going to be really important. We also have 2s, 5s, and 7s on auction, including today, those 2-year notes. And then today's economic calendar, not quite as exciting, but we have a number of different items coming in, including SMI Global Composite PMI Flash, Manufacturing Flash, Services Flash, all coming in at 9:45. So that's our next event volatility catalyst, as well as new home sales year over year and month over month at 10 a.m. Richmond Fed, and then we have that 2-year note auction. The bill auctions tend to be kind of non-events. So these are things to watch for today. I think it's going to be an interesting and potentially dynamic trading day ahead. We've just got about 7 minutes left. The next one is earnings. Okay, this is a huge week. So tonight, lots of folks talking about Tesla. Obviously, we have Visa, Enphase, Texas Instruments, Baker Hughes, Seagate. These are all pretty important names to watch. And then as the week goes on, we've got Meta, Microsoft, Alphabet, just a number of key names in this market that I think that these earnings can move things either way, up or down. That is to say, tails are fattened in both directions, both left and right. And we have a less liquid market. We have less of those passive flows. We are deep in negative gamma territory. So expect greater volatility as well. So we're going to dive right into Bookmap. But before we do, I'd like to tell you just a little bit more about where you can follow my work. On Twitter, you can check me out at Mayhem 4 Markets. That's Mayhem number 4 Markets, as well as YouTube at Mayhem 4 Markets. You can also check out my trading ideas, coaching, and unique market tools at TraderAid.com. You can get up to 40% off of Bookmap by visiting TraderAid.com/Bookmap and just scroll down to the specials. And you can also check out my new advanced SPX options visualizer that I built for Bookmap. It's available at the Bookmap Marketplace. Go to TraderAid.com/SPX to learn more. And my long-term trading and investment ideas, research, and institutional consulting services are available at macrovisor.com. And I live stream regularly, including for Bookmap, every Tuesday at 9 a.m. Eastern. So be sure to join me every week. All right, so let me go ahead and just close out of that. We have Bookmap on screen here. And we're going to start looking into how this market is set up as we approach the market open here in just about 6 minutes. So we got a little bit of a pre-market bid. Cash is implied to open around 50-30 S&P. We do have a really large amount of options positioning at 5,000, which can be a bit of a magnet. It can be a bit of a support and resistance level. I think it is an important area for us to just keep in the back of our minds as we trade this week. But overall, we've got a bit of a bid this morning off of the lows earlier. We had Johnson Red Book come in a little bit earlier as well. That was the most recent economic data that printed, and I'm just taking a look here to see what we got from that. All right, so we'll come back to that in just a moment here. I'm just looking through the headlines as we get ready to open up. We've also got Lockheed Martin's earnings came in earlier. They missed on earnings, but they beat on sales and operating profit pretty decently, and their backlog grew. The defense sector is certainly a place where there'll probably be a durable bid as long as geopolitical tensions are on the rise. Of course, Tesla after hours EPS expected of 52 cents, revenue of 22.42 billion. This may be the first time in years that Tesla sees declining sales year over year. Now that S&P bid, as we get into the open, I think it's going to be real important to see how we trade in the first 10 or 15 minutes. Remember, yesterday we saw a bit of a sell into the last hour of trading, so some of those flows could still be pent up and could impact that morning price discovery. And again, we don't have those passive flows that typically bid up the market in the morning, those Vanna and Charm flows or those buyback flows. So I think that all does matter, just in terms of what we may see. So I'll be interested. This is also not really a market that is oversold, so that sort of reflexive buying after seller exhaustion is not something that I necessarily expect to be a strong theme. That is to say, if there's accumulation, it would be real accumulation rather than just these sort of mechanical flows that are happening. All right, I'm going to bring back the streaming voice news here as well. So you'll hear that occasionally if you're on the YouTube, Twitch, or Twitter streams. That's basically live squawk from Financial Juice. Let's go around some of these other markets as we prepare for the open here. NASDAQ has a very similar look as the S&P, getting a nice kind of V-shaped bid off of that bottom. And these are levels that were support, by the way. So it's not terribly surprising to see what we're seeing. If we zoom in on some of these charts, you know, we can kind of see that these are levels that we talked about a little bit earlier on the S&P. So let me just see if I can bring one of those on screen. So this is really zoomed in, but you can see, you know, we got this bid back overnight and we started to push above one of these key levels, and now we're making a greater push. This is just a 2-hour chart, but I think it just shows that, you know, the market has that muscle memory. It likes to revisit these levels, and I think we're seeing a bit of that as we approach the trading day today. So again, you know, we're above a level in the S&P where I would be inclined to take longs above shorts up to 5102.25. I'm not intermediate term bullish, but some reflexive buying, it would, you know, organic accumulation of shares is not too unheard of after 3 weeks of straight selling pressure in just one up day. Tuesday is also statistically have a reasonably strong chance of being green days overall, just looking at, you know, 30 plus years of trading history in the market. We've got the Russell on screen here. Also shows an overall similar look, maybe a little bit less vigor in the bid, but this reversal from earlier distributive flows. And here we have the 10-year. The reason I bring this up is I like to watch this when we have economic data. So we'll see how we fare. But one thing you'll notice with this as well is rates hit their high around the same time markets hit their low. Obviously, the 10-year note futures trade inverse to rates, right? So when this is hitting a low, rates are hitting a high. And we had that rebid in the market at the same time 10-year notes were rebid. So that's interesting. There is a pretty important dynamic there. There's a strong negative correlation between rates and stock prices right now that has grown over the last month and a half. You've got crude oil on screen. It is bouncing. It has pushed above that point of control. Remember, I talked about 80, 50 and change being an area I wouldn't mind buying. I'm still looking at this thing. I wouldn't be too surprised if we get down there for a very quick sort of look below, and that would be where I'd be interested in buying crude. I'm also interested in continuing to accumulate names in the energy space during this episodic weakness. Gold on screen, it's settling a bit lower. Remember, I talked about the trend line that I see in gold. This still looks like an attractive area to consider bidding, and it has come off of those earlier lows. And actually, this point of control pretty much lines up to the bottom of that trend line that we were looking at on an earlier chart.
So we're looking now to the market on open imbalance, 150 million to the buy side.
And here we go. Markets are open. We're just going to move things back over to the S&P here. We'll look around some of the other markets and stocks in just a few minutes. And folks, while you're watching, if you have any questions about anything, let me know. Always happy to answer. And we'll zoom in just a little bit here to the microstructure as we're opening. I like to get just kind of a closer look as to what's all happening here. We do see a reasonable amount of resting liquidity above us. And we do see some distributive iceberging. These icebergs on top indicate sells, right? And you can see that in the subchart as well. So interesting, not yet of size that I would be too concerned about. And it also seems like buyers are overall absorbing that pretty well, but let's keep watch here. And we see buyers pulling up that point of control just to about 50.6950 on the S&P. And we're about to take a look around some of these other markets. Take a look at the NASDAQ, Russell, commodities rates, and some of these key stocks here. So let's switch our view over to the NASDAQ. Could see it's getting a nice little bit off the open. Some of that selling coming in here, but we'll zoom into the microstructure, get a better idea of what's happening. So a little bit of iceberging on top here, just about 17 contracts sold. Buy side stop out on the way up. Doesn't look exhaustive, but let's watch that. We've got the Russell enjoying a pretty strong bid off the open as well here, and even into the open. We'll also zoom in on this one. Some of that bid being reversed, but I'd like to see it push above the point of control and build acceptance here to get a little more bullish of the small caps intraday. We've got rates mostly stable here. We'll zoom in here. This is not usually the most exciting contract, but when there's economic data, it can move. Crude just getting an additional bid here. We'll also zoom in on this one so we can just see how it's trading in smaller time frames. And gold continuing to show some upward pressure. I'm still bullish on this one. I like that bid off the trend line. And silver also defending a pretty key level. Remember, I really want to see it stay above 27.045. That's kind of my key level for silver. As long as we close above there, I'm still bullish on it. And so we're right at that area. Let's see how it trades. We've got copper on screen here. Dr. Copper just, had a really, really strong couple of weeks. I think it's just doing more of a corrective pause.
So in 10 minutes time now at 9:45 a.m. Eastern time, we see the release of the US S&P PMI data. This is the April prelim reads. Manufacturing PMI forecast at 52 on the prior 51.9 with a range of 53 to 50 expected. Services PMI forecast at 52 on the prior 51.7 with a range of 52.2 to 58 expected. The composite PMI flash forecast 52 as well on the prior 52.1.
So that PMI is pretty much the biggest piece of economic data we'll have while I'm streaming. So we will be watching that
So just
one.
to reiterate there, so the S&P services PMI flash, the forecast is 52 on the prior 51.7. The range 52.2 to 50.8.
And that's coming up at 9:45 a.m. Eastern. Let's take a look at the euro versus the dollar. We do see a little bit of dollar strength here as the euro is rolling over. A theme that I think is a longer term theme. The Eurozone is a more interest rate sensitive part of the world. The ECB is going to be cutting earlier than the Fed and probably more aggressively and already from a lower rate. So there's still reasons for the euro to continue weakening from here. Let's get a look at semiconductors. This has been a space where, boy, volatility has been no stranger to a lot of these stocks, and SMH just sort of chopping sideways here in about a range of $1.25 after the open. We'll be watching this one and some of the larger constituents, especially NVIDIA. We've got Apple here off the open as well, also sort of chopping in this range, seeing a bit of a rejection at that larger offer at 165.80. I like to watch these large levels of resting liquidity both on the bid and on the ask. It can help you to define areas of intraday support and resistance. It can also give you a sense as to where we are in the auction, right? When you see supply overhead and price runs away from supply, what does that tell you? It tells you that there's not enough demand in the market to push price above it at that moment. So the path of least resistance becomes lower and vice versa. That's part of auction theory, the balance between supply and demand. And I like to say there's 3 states in a market auction. There's a state of excess supply, which that little move in Apple would suggest just during that small time frame we saw. That means the path of least resistance becomes lower if you can't chew through that excess supply. There's excess demand, which tends to push price higher because there's more buyers than sellers. And so you might see, like, for example, a large bid below, sellers can't take it through. So you start to see a reversal. And then there's a state of rest where there's a balance between buyers and sellers. You can sort of see a sideways consolidation. We pull up Amazon. Amazon getting a bit of a sell off of the open here and actually chewing through a decent area of bids. So what is that showing you based on auction theory? It's this idea that there's a sufficient amount of supply to push that price lower below that key 177 level, taking out 12,000 shares on the bid. Google having a bit of an opposite open as to Amazon, actually bouncing off of a level of about 156.25, rejecting that, moving higher, and now pushing through VWAP and the point of control. So this one looking sort of like the opposite. And you actually saw some supply overhead either move higher or just take it off the books completely. It looks like they took that off the books, or maybe they moved up to 158.50. Either way, though, that's an interesting idea. You can see auction theory playing out in real time with the way Bookmap visualizes all of this data. That's one of the reasons I really like the software overall. And then you've got Meta. Meta is a bit of a chop fest. And, given the chart that I shared earlier, that makes sense. There's a big decision point right below us. Are we going to fill that gap? I don't know that we'll get a resolution to that decision until after earnings, depending on what all we both hear regarding what happened during quarter one and what they're looking out for during the year ahead. Is the company going to be able to monetize its AI endeavors? It's been doing a lot in open source AI. It's built new capabilities into Meta's
US dollar hits new 34-year high versus the yen of 154.88. Last flat on the day at 154.87 yen.
Wow, that's actually a pretty big level. So we'll just segue to say that
5 minutes away from the US S&P PMI data. Manufacturing PMI flash forecast 52 on the prior 51.9, with a range of 53 to 50 expected. Services PMI flash forecast 52 as well.
So I'm just going to segue away to say that what's happening in the yen is actually pretty important. It does make it more likely that the Ministry of Finance intervenes. Those interventions tend to be ephemeral and offer opportunities to fade, which would be a bid in USD JPY, for example, on the other side of that. So I would just be looking for that intervention. For me as a currency trader, I would be looking to fade the yen as that intervention loses momentum. So just a heads up that we're getting closer to some of those key levels in the USD JPY pair. So we'll move on to Microsoft here as we approach S&P PMI data. Microsoft actually took out some supply overhead, but it looked like there was more supply that buyers weren't able to take out. So we see this pretty choppy trade and almost coming into a balance into this range. So we'll be watching that. We'll also be watching the 20-minute opening range in the S&P and the NASDAQ for ideas as to whether we may get a trend day or not today. NVIDIA actually pushing above that key $800 level here and holding above it pretty well. This is a level where there's a lot of options interest, so it's important for bulls to see NVIDIA above 800 to show that there's some potential for continuation higher. And we've got Tesla here. Tesla seems like it got faded at the open. Its earnings are coming up tonight. I'm sure folks are pretty jittery about it, given that there's a lot of narratives for the company that are no longer necessarily in play. We can see this is a classic auction story of insufficient demand. You got up to that 35K share offer zone at 144, and we've just been taking out demand all the way down, right? You've been taking out those bid zones. So plenty of supply here, no conviction from the buyers so far. Let's see how that plays out. And then we've got Bitcoin. I do need to work on the connectivity there, so we'll get back to that in just a little bit. And now we have the S&P continuing to move higher. We do have an intraday wall of calls identified up here in SPX. I imagine that could be an area of resistance. It does correlate well with this offer around 50.80. So those two areas will be a key proving ground for buyers. Remember, I did talk about 5,100 and change as sort of the upside key area of resistance based on prior price action. So if we push above there, that would be my upside target for the S&P. Now let's just zoom out just a little bit so we can keep the opening in view, because we are looking at establishing that 20-minute opening range here, and we're just less than a minute away from that data. And you can see as we get to the data, the liquidity around the order book is disappearing. This is very common around event vol catalysts. That's why you got to be careful trading events.
1 minute remaining. I'll lead with the US S&P manufacturing PMI flash. Ten seconds. $49.9, 49.9, that's lower than forecast. 52 with the services PMI flash at 50.9, 50.9, lower than forecast. 52.
So those lower than expected readings on S&P PMI should be overall bullish for equities and should help to bring rates down. And we are seeing that positive reaction in the S&P. We also see that over in the NASDAQ here. You see some aggressive buying flows in there. You also likely seeing, yep, there it is, big buying in the 10-year, gap up. So that's a big stopping out there too. Look at that, 1462 contracts on the stop out. So when you get that weaker than expected economic data, it certainly helps to drive that bullish spirit in the market, because what are people looking at? They're looking at it from the perspective of, oh, maybe the Fed is more likely to cut sooner than later. And so that's really what this is all about. Bad news is good news because it changes expectations regarding the Fed. You get that weaker than expected PMI data. That brings a stronger bid into equities and into rates. And so that's exactly what we're seeing here. You do have some institutional selling into this. You have some larger iceberging happening into this bid here. So we'll see if this is durable, but larger players are starting to distribute that. You can see that in the lower right-hand side radial, icebergs at negative 3,000, showing that institutional passive distribution into this strength. And then up above here, you can see some liquidity building up at about 50.90 on the ES contract. And we are just testing that intraday wall of calls that I think is important to watch, because it can provide some resistance here, and so far it may indeed be. Dollar also slipping lower as rates move lower. We talked about the interplay between the 10-year note rate and the dollar, certainly seeing that play out today as well. And this is one of the reasons that I feel like the SPX options visualizer that I built adds value, because it does help you to automatically create labels where there may be
on these PMI numbers.
Price activity that is important, right? So you see that resistance at the call wall, you see gamma 3 up ahead, you also see the midpoint on screen. What that's showing you is that there's a relative balance between the total amount of calls and puts, and when we zoom out, we can see that that activity is starting to show on screen. Today's options volume across the entire S&P chain. There are more calls transacting than puts so far. There's certainly more interest in upside. And we can see that it's relatively balanced when the midpoint is on screen. It's starting to get more aggressive to the call side, however, and we are starting to push above the call wall. We are seeing liquidity building above us. So again, this is going back to what I said earlier, that above that pivot level, I was looking for more upside in the S&P to about 5,125. I'm still kind of looking for that, and the market's giving me signs that I'm probably right, that that's a key level to look for, because there are other larger parties that want to get out just around that level. So for me, what I would do with my exit is I'd say if I'm looking to exit there, I'm probably going to drop it by 2.5 handles, because I don't know that I'm necessarily going to have requisite demand to push all the way through here, right? So I might want to get out a little ahead of some of the bigger guys. But I think it's right now in the here and now important to see whether we're able to build above these levels, right? We see the call wall now starting to vanish as options positioning changes intraday. That call wall has now pushed higher. That's also a bullish sign. Okay, so this is data that, unlike a lot of options visualizers that may exist, is updated every minute. It's updated as the market's transacting. And so, when it gets real busy, there might be a 10 or 15 minute delay, but it's certainly not a 1 day delay as you may see otherwise. And we are seeing just a lot of sort of indecisiveness here after that move. So that doesn't have me looking at this with any real high degree of conviction quite yet. One thing that I do see, however, we're going to go back to that opening range and we're just going to start looking at where that top is, right? So the top of that opening range is the top of that move that we just had. So let's call that 50.8550. If we can push above 50.8550, which is just around that gamma 2 level, I think we've got room for that extension, right? And then on the other side of that, the bottom of that opening range is going to be about 50.64. So if we do get below that 50.64 level, that's going to have me really reconsidering longs in this market and looking more for fades. Right now, we're seeing this move starting to become undone in S&P. Let's see what's happening in rates. Rates still showing relief. So nothing in rates to say that the move in stocks should be faded, and that NASDAQ has a different view. NASDAQ is actually giving up almost all of those gains, looking like it wants to settle back down here at that point of control. So bit of a choppy set of cross currents here so far. You do have, in terms of unusual sweeps and single stocks and ETFs, much more on the bullish side than the bearish side. And we've got sweeps in VRT, TLT, SMH, NVIDIA, Tesla, SPY, Ford, and a number of others. So that tends to be bullish when you see that unusual sweep activity in the individual stocks, versus the puts when the calls are outpacing the puts. And right now it's about 2 to 1. So just keeping an eye on that overall. Let's take a look here at the NASDAQ again. Didn't quite make a lower low, so that's good. We do have about a 20-point opening range in the S&P, so it's not the biggest opening range, but it's enough that we could build extensions off of it if we get a move decisively one way or the other. Let's take a look around some of the other parts of the market. I've got just about 7 minutes left here with you all. Sure, great question. So the S&P options visualizer that you see in the right column is available at the Bookmap marketplace. You do need to have a copy of Bookmap and either the DX feed or Rhythmic subscription, and it is specifically built for the S&P 500 futures contract, or ES. So let me know if that helps. You can find it at traderaid.com/SPX, or you can go to the Bookmap marketplace and search for Advanced SPX options visualizer, and it'll pop up. Yeah, you're very welcome. So Russell's getting a nice strong bid off of this as well. Some continuation there in the small caps that tend to be more rate sensitive. They're actually looking comparably better than the NASDAQ or the S&P. So they're really loving that 10-year note seeing a discount on rates. NASDAQ's getting this rebid here. So, looks like that was more consolidation after the gains, but those gains are largely being accepted from what we can see. Let's just check back in on the 10-year. 10-year also building. So again, seeing more relief in rates, that's helpful to help to bring equity prices a bit higher. Those intermarket dynamics are pretty important. Crude also rallying here. Crude getting a bid up to 81.80 after that bit of weakness earlier. Let's see how gold is doing. Should be good. Yep, gold loves that drop in rates. I mean, typically when the dollar's down and rates are down, gold's getting a strong bid. So it's continuing off that theme. That rebid from the trend line we talked about earlier looks like it's intact. Let's take a look at silver. The metallic widowmaker getting a nice strong bid. Boy, it's up about 30 cents from earlier. Not a bad place to buy, where we talked about up over 1% on that rebid in silver. Copper also getting a rebid here, looking pretty good. Euro should be gaining, and it is. Look at that bid. That's showing you the weakness in the dollar. About 70% of the US dollar index is the euro. You can see there's a pretty decent offer here, giving us just a little bit of resistance. Let's check in on the semiconductors. Semiconductors also getting that nice bid off their lows. So actually starting to look quite a bit better in the semis. Apple also getting a nice bid and actually starting to chew through overhead supply. So Apple showing some conviction, those larger delta bubbles showing buyer aggression. So that's good. Definitely a nice sign to see one of the biggest companies in the market getting a bid. It always helps to pull the indices higher. If that's your trade, then that's an encouraging sign. Amazon not looking great. Actually saw sellers take out this lower bid at 176 and absorb it. Now just kind of getting a tepid bid, more of a consolidation, accepting that move lower than anything too encouraging so far. Google chopping in this range. Let's zoom out just a little bit more. Overall, still looks constructive, but lots of overhead supply. So we'll be wanting to watch to see how it goes through that. Meta was weak earlier and still not really looking as good as some of its peers, but off of its lows and rejecting that 489 bid, turning the other way, pushing above VWAP and testing that point of control. And Microsoft, Mr. Softy, seeing some potential overhead resistance at 4K. We had one attempt before. We're making another attempt now that looks just a little bit more promising. Just took it out. So that looks like 408 is the next level of really large overhead supply with 11,000 shares on offer. And now everyone's favorite stock to love or hate or at least talk about, NVIDIA. You've got a really large resting offer at 815, a sizable resting bid at 810. Watching these areas to get a sense as to where things are, but above 800 is bullish in NVIDIA overall due to the way options are positioned. Tesla getting a nice solid bid finally here, actually taking out a really large resting offer at 145, pushing above that point of control. Remember, you do have earnings in this company tonight, so be careful playing this one. And then with Bitcoin, we will revisit that one shortly. I just need to work on the data feed there. And we are back to the S&P futures contract. We are seeing a little bit of resistance at this 370 offer around 50.90. That is just above where the most active call strike has moved on this contract. And the second most active call strike, about 20 handles plus higher, about 25 handles higher here, around 51.12. So I've got just about a minute left on the stream. If y'all have any questions about anything, please do let me know. Bookmap for NVIDIA, please. Yeah, we did go over NVIDIA. Lou, are you looking for like an options visualizer for NVIDIA? What would my estimate be on the 2-year auction with the mixed performance from previous auctions? So this is a shorter end auction. The 2-year, I would say, is going to be pretty important because it's going to give us a sense as to what the market's really expecting from the Fed. Given how high rates have risen on the 2-year note, I would expect that it will be a reasonable auction. That is to say, I'm not particularly concerned of larger than expected tail on this auction. I'd be more looking at the 5 and 7 with some degree of concern as we get out further on the duration spectrum with a lack of risk premium, or a lack of term premium, I should say, to really make up for that. Like you're committing capital to the treasury for a longer time. You're not necessarily getting paid for it. So I would say I'm not super concerned about the two, but I'll be watching it closely. I think either way, it can be a market mover today. And I think we need to watch these treasury auctions because they tend to impact price discovery in equities even more than some of the economic events that we get. So that's going to pretty much wrap it up for me on today's Back to the Futures stream. I hope you all enjoyed it. Really appreciated you all stopping by and hanging out with me as we went over what all is going on in these markets. I know it's crazy out there, so feel free to shoot me a DM or an email if you have any questions about anything you've seen or are interested in learning more about the Advanced SPX Options Visualizer. For Bookmap, they have an amazing crew of people out there, so if you want to learn more about Bookmap, join their Discord, ask questions. The community and the people behind the company are absolutely awesome. If you want up to 40% off, check out traderaid.com/bookmap and visit my work at traderaid.com. You can learn more about trading strategies, ideas I have to trade this market, and unique tools I built to visualize options and more. Check out my work at Macrovisor, where macro plus momentum means opportunity. That's where we try to identify the bigger picture view and how it can correspond to longer term investment strategy. And we've had some real bangers there. In fact, featured on Fox Business by Charles Payne recently, just how good some of those calls have been. And follow me at YouTube and Twitter with the handle Mayhem 4 Markets. That's Mayhem number 4 Markets. Thanks, everyone. I'll catch you next week.